Why, hello there, Hector Davil here. In this video we are going to be focusing on the sixth condition, on the sixth trend condition. Basically we are going to be focusing on the dynamic area of support and resistance, since we already reviewed the first 5 conditions on a previous video. If you remember, we defined the dynamic area of support and resistance as the band between the area between the 30 and the 50 simple moving average whenever we are in a trending scenario. So basically, as long as we have these 5 conditions in place, then we can focus on the dynamic area of support and resistance. Please don't try to search for any type of bounces, any type of market reaction of the dynamic area if you don't have all these 5 conditions in place. Again, the dynamic area of support and resistance is only valid, it only makes sense as long as these 5 conditions are in place. Alright? Enough of beating that horse. Let's focus on this 6th condition then. Well, I guess we should start off by defining what harmonic bounces are. Right? And we just need to look into the shape of price action whenever price is trending in any given direction, either up or down, it doesn't really matter. But as you probably know, whenever price is trending, it doesn't quite do so in a straight diagonal line, Instead, we usually see a swinging or waving pattern where price gives us, consequent pushes and pullbacks in the direction of the trend, right? Obviously, scoring higher swing highs and higher swing lows in the case of an uptrend, and the other way around in the case of a downtrend. Well, we are going to be analyzing those individual swings, searching for a harmonic pattern. The more harmonic they get, the better for us as traders, because the easier it's going to be for us to pinpoint the bounce area, the bounce point, and therefore the easier is going to be for us to pinpoint our entry point. Obviously, our goal here with the 3 SMA system is to profit from each consequent swing. Every single push that price takes in the direction of the trend is a whole new trading opportunity as per the 3 SMA system, right? And the sharper we get those bounces, the easier it's going to be for us to enter the trade at the optimal area. That's why we want to see harmonic bounces of the dynamic area of support and resistance. Alright, let me give you an example. Alright, this is a screenshot, a chart you've already seen previously, but please mind how price gives us a rather nice, a rather harmonic swinging structure, with the individual swings, or most of the individual swings, taking off or starting off the dynamic area of support and resistance. We have a swing down and a retracement back to the dynamic area. There it goes for a whole new swing. Then another retracement that doesn't quite reach the dynamic area, does it? No, it doesn't. Therefore, this is not a swing we would be interested in trading. We would not be taking any trade there. Then we have another pullback, and then another bounce of that area, and there it goes, price once again for a whole new swing. This indeed would be a swing that we would be indeed interested in trading. There goes another one there, with the swing starting at the dynamic area of support and resistance. That's why I was mentioning that the 6th condition that we are going to be applying or searching for in our chart are bounces that take place of the dynamic area of support and resistance. Please let me go back into our previous slide. Harmonic bounces of the dynamic area of support and resistance. We're going to be searching for this type of bounces of those areas. I will explain you in a future video what exactly we are going to be triggering our trades of, what type of price patterns, what type of market events we are going to be waiting for at those areas in order to trigger our trades. But for the time being, just please remember that those bounces that take place or take off the dynamic area are the optimal areas to enter the market. Alright? Let me give you now another example, another screenshot. You haven't seen this one before. And well, we are in another trending scenario. Please mind how the moving averages are all parallel, or all of them pointing in the same direction, etc., etc. The trend actually ends somewhere in this area there. Okay, we eventually get a crossover. We eventually get multiple bar closes below the 50 simple moving average. Okay, eventually price touches the 100. That's where it all comes to an end. Okay, now please take a look at the swinging formation. Do you see that? That's the type of swinging formation you want to search for. Those are the best quality trades you can take if you are interested in trading or taking trades in the direction of the trend. Okay, basically, if you are interested in trend riding systems, you always want to wait for pullbacks, and those pullbacks taking place or driving price back to the dynamic area of support and resistance. That's where you want to be ready to jump into the market, okay? Because chances are that you are going to be profiting from a whole new swing, again, in the direction of the trend. Okay, those are the specific areas you want to be ready to click on your buy button in case of an uptrend, sell button in case of a downtrend, of course. But again, those are the optimal areas to join the trend, okay, for further profits on each consecutive swing. Now, we're also going to be using the dynamic area of support and resistance in order to determine what time frame, or rather which time frame, the trend belongs to. You see, occasionally you might find the 5 SMA conditions applying on 2 different time frames at once, especially if those time frames are close to each other. For example, the 30 minutes time frame and the 1 hour time frame. Okay, you can easily see all the simple moving averages pointing in the same direction on both time frames. You can find them all parallel on both time frames. You can find price remaining at the right side of the 50 simple moving average on both time frames, etc., etc. Then in such cases, obviously we ask ourselves, what time frame does this trend belong to? Is this a 30 minutes time frame trend, or is this an hourly time frame trend? Well, that's exactly what we are going to be using the dynamic area for, okay? And the way we are going to do that is by analyzing those harmonic bounces. Remember, we want the swings to start, okay, and to retrace to this area between the 30 and the 50 simple moving average. So imagine we have price on the 30 minutes swinging something like that, and on the 1 hour time frame swinging something like that. Which time frame do you reckon this trend belong to? Meaning, on which time frame you should be focusing your attention on, and which time frame you should be searching for your trading opportunities on. Okay, well, obviously that would be the 30 minutes time frame, because the price retracements hug the dynamic area of support and resistance much more accurately than they do on the 1 hour time frame. Alright, now this is just a drawing. Now I'm going to show you some real case examples, some charts where this actually happens, okay, where this actually takes place, and you will understand right away what I mean. Okay, alright, let's get going. Alright, we are now looking into, well, 2 different charts belonging or related to the sterling pound against the American dollar. Okay, sterling pound against the American dollar up there, and a sterling pound against the American dollar down here. Both charts also relate to the same period of time, beginning from the 4th of February 2010. 4th of February 2010 all the way to the 9th of February 2010. 9th of February 2010. So basically it's exactly the same chart. The only difference is that this is the 30 minutes time frame and this is the 1 hour time frame, right? Well, let's analyze these two different charts. We can see on the 1 hour time frame that well, the moving averages are all in order, right? 30 below the 100, the 50, and the 50 below the 100. Then all of them are pointing down. Then price is nowhere near the 100 simple moving average, right? And at least for this period of time, well, price has been most of the time at the right side of the 50 simple moving average. A little bit of a breakout there, but immediately after price comes back down, so that's okay. So all in all, we can indeed apply the 5 conditions we are already familiar with, and therefore this is indeed a trending scenario. Right, now let's take a look into the sterling pound against the American dollar on the 30 minutes time frame. So as we can see, also from this moment on, all the way down there, the moving averages have all been in order. Price nowhere near the 100, also remaining at the right side of the 50 simple moving average. The moving average, all the moving averages are pointing to the same direction, meaning to the downside, etc., etc. So yes, again, also this particular currency pair is trending on the 30 minutes time frame as well. Now the question is, so if we have two equally valid time frames, on which specific of those two, on which specific time frame out of those two should we focus our attention on? On which specific time frame should we searching for our trading opportunities? Well, we are going to be using the 6th condition for that. We are going to be analyzing the harmonic bounces, or rather how harmonic those bounces are in relationship to the dynamic area of support and resistance. Well, let's start off by analyzing this trend on the 30 minutes time frame. So what type of price action do we get here? Well, swing down in the direction of the trend, pull back, dynamic area of support and resistance, off it goes. Sideways price action, dynamic area of support and resistance, off it goes. Pullback, dynamic area of support and resistance, off it goes. So on and so forth. Another pullback, another bounce, and all the way until here, where price, upon retracing back to the dynamic area of support and resistance, we see how instead of getting a bounce, what we get is actually a breakout, and it's not a mild breakout such as in here. Instead, price begins to give us multiple bar closes. I mean 1, 2, 3, 4, 5, 6, 7, multiple bars closing above or at the wrong side of the 50 simple moving average. Now coming rather close to the 100 moving average, that's never a good idea. Then the 30 simple moving average is already flat. Okay, it's already flattening down. Well, all in all, I would say that from this moment on, around these areas where this trend comes to an end. So we can redefine. Actually, we also get a crossover there, but at any rate, we can redefine, we can tighten in the end of the trend as per the 30 minutes time frame. All right. Now let's analyze the price action we got on the 1 hour time frame. Price moves down, doesn't quite touch the dynamic area at any point, moves down, a little bit of a retracement, it doesn't hit the dynamic area, takes off on a whole new swing, a little bit of sideways price action, doesn't quite hit the dynamic area of support and resistance there either. And then, well, finally a retracement coming back to the dynamic area of support and resistance. Please mind that this is the first time price has touched the dynamic area of support and resistance in this trend. In this time frame, okay, in the 1 hour time frame. It's the first time we actually get a price retest of that dynamic area of support and resistance. All right. So, out of these two choices, which one do you reckon is more or represents more accurately this trend? Well, obviously the 30 minutes time frame, because price is not only hugging the dynamic area of support and resistance, but also respecting the dynamic area of support and resistance. And that's the key idea here. Since we are going to be using the dynamic area of support and resistance in order to pinpoint our entry points, our entry levels, as long as the trend is in place, meaning from here all the way until here, okay? As long as price keeps on coming back to the dynamic area of support and resistance, and as long as that price, or that dynamic area of support and resistance keeps on being respected by price, it's okay, it's great. We keep on getting new trading opportunities every consecutive bounce, every consecutive swing that takes off from that specific area is a whole new trading opportunity for quick pips, okay, for quick swings in this specific trend. So as you can see, in this trend, it's not about taking just one trade. We can take one trade, two trades, three trades, four trades. We can get multiple trading opportunities within the same trend. Okay, that's what the 3 SMA system is about. It's about profiting from each consecutive swing that takes off from the dynamic area of support and resistance. On the other hand, we cannot really apply that same principles on the 1 hour time frame, can we? I mean, price barely retests the dynamic area of support and resistance at the very end of the trend. Okay, so this, if I was to choose, if I was to pick, or if I was to label this trend, I would say that this is indeed a 30 minutes time frame trade as opposed to a 1 hour time frame trade. Okay, that's how the dynamic area of support and resistance can not only help you defining the optimal entry point, meaning the optimal bounce point, but also the time frame, the correct time frame to follow that trend on. All right. Well, okay, now congratulations, you've completed the first part of the module, the first part of the 3 SMA system, which was basically to identify solidly and healthy trending market scenarios. You know now how to identify a healthy trend, not only as what it looks like on your chart as per the first five SMA conditions, but also what's the correct time frame to look into that trend. All right. Well, okay, now, since the 3 SMA system is exclusively a trend following system, from this point on, from this moment on, over the following videos, I am going to be assuming that we have confirmed all these 6 conditions. I'm going to be assuming that, well, we are indeed in a trending scenario. From now on, I am going to show you how to enter the market, where to place your stop loss, where to place your profit taking levels, etc., etc. And, well, since I don't really want to get repetitive, I am not going to be talking anymore about the 3 SMAs, the order of the 3 simple moving averages. I'm not going to be mentioning whether they are all pointing in the same direction or not. I'm not going to be mentioning whether they are all parallel or not. I am just going to assume that they do. Alright? Again, since this system is all about trading the trend, I will indeed assume that we are actually in a trending scenario. Okay? Alright, folks, I'll be waiting for you at the next video. Cheers.